Okay, mate. So you have a margin, isolated margin position on Doge, 12.8. I put this down here, 12.8, this line down here, just to kind of show rough area. I don't know exactly where it is, but do I think the 14 area could hold in general? It's interesting, right? I want to flip back to this 2-day chart. I clicked the wrong one there. Yeah, so you're right. This is a pressure cooker here. Right, see this white 100. In bad case scenarios, sometimes you do come straight back into the white 100 before getting the move. Okay, so I'm just saying, first off, can't really fully rule it out just yet. Let's look at it a bit more. Also, I don't know where you entered. If you have now bounced back to your break even, for example, it might be good to close it. If you've bought up here somewhere, yeah, okay, that's a different kettle of fish. But what I like to do is if I get into a trade, example a margin position, and it goes against me and then comes back to break even, sometimes I like to close it and reassess, maybe try and buy back a little bit lower to improve the position. It allows you to kind of go at the position again with a clear head and kind of wait for a good entry point. Now, a good entry point, how would I like to trade this? I mean, I always say you want to be trading into green candles for a start. If you're going long, I'm assuming you're long because your liquidation is down here 12.8. So I'm assuming you're long. I don't know where you got long, but if you look at these, these are red candles. Like if you're buying, you're knife catching into red candles. That is not what you want to be doing. I mean, ideally, sure, if you knife caught down here, you got a great entry point. But if you knife caught anywhere down here, you were probably losing money the whole way. So, you need to be really refined if you're buying into these red candles. I tell everybody to try and be safe and try and trade with the trend and try to trade into green candles because there's a more likelihood of success. Like you could have bought anywhere in all of these candles, right? That's a just look at it here. It's a 38% bounce, but you could have bought 100 different positions the whole way up here 100 times, and you would have been successful 100 times because the price kept going up, as long as you had patience and understood that you were trading with a trend. Now, from the drop here, you could have traded 100 times going long, and 100 out of 100 times in here adding the whole way down, you could have been losing in a losing position the entire way down. Of course, if you're trying to build some sort of spot position or whatever, that can be different because you can sit in that and wait the whole way through this and wait for it to go back up, right? So it's about planning that trade, being safe, and obviously don't use too much leverage as well. But yeah, anyway, I just want to give you some thoughts on that, on structuring a trade and trying to be safe. Because it's harder for me to tell you exactly there without knowing where your entry point is. Is the 14 area going to hold is kind of what you're asking anyway. We can work with that. The 14, I mean, that is your huge line in the sand right now. You definitely don't want to see that breaking again. If you see that breaking again, it's really, it is a sign of weakness. So you can see here, see this large candle. After that, you get a new bounce higher back up to fill that wick. That's what you're looking for at this point. This is a pretty bad rejection at this point. Ideal situation, it does bounce, and this is not as large of a wick. So what I'm saying is, this is the weekly open. So the 14 area, it's 14.4 actually, is the weekly open. For now, I have to say yes, I think this will hold. I mean, I don't think that this is going to flip red. It would be pretty bad if it does flip red. A lot of times, sorry, hold on. Yeah, there's only, we have a new hour, sorry, in 1 hour we have a new week. So maybe you could consider selling on a bounce and to take liquidity up here. If I don't know what your entry point is, but if it's not a good entry on a new week, if there's any sort of bounces in here, maybe you may consider selling it and trying to get out at your break even. Now, hopefully you haven't got in, up too high. if there's some sort of bounce into your break even, maybe get out and reassess and find that safer entry. What I don't like about this Doge chart is this wick down here has not been filled, right? Which is coming down closer to your liquidation. So what if this does come down to fill this wick? It's getting down close to your liquidation point, right? And that's getting dangerous. I think Doge does go higher eventually, but this is all. Look at the size of this move. It's already a huge move. Like if we actually look at this, the length of this move, it's a 92% bounce. That's already a large bounce. So it makes me weary when things have already bounced up that much. It makes me think I need a very, very good entry if I'm going to get involved on this. So for now, I think it will hold, but I would be cautious. I don't know what target you're looking for. I'm cautious if it moves up into here, it could get rejected to come down to fill this area first down here, down in this 13 area or something, before getting further upside. I think something like that is very possible to happen. Now, if I flip to a 2-week chart, this sometimes is a decent setup, right? In very strong markets, what can happen is it can actually do something like this, okay? But there often is some sort of downside first. Often, right? Now, of course, we need to see how this develops. Meme coins are still pretty hot. But a dip down in here to maybe fill some of this wick, you can see what that is. That's the 13.9, 13.8 down into here. So if it is strong, then those levels should be a decent point. And you can see this previous wick here, right, as an area. It should hold above that if it's strong. Okay. If it does bounce first in the week, maybe you could consider taking some profits, and or all of it if you see it topping out, and wait for the dip down to do something like this. That obviously leaves yourself open to missing the trade if it just starts running without any dip. But there's always another trade, and you still have your account. If we flip here to the monthly is now red. This is not good. It's not ideal. Of course, you want to see it long and move up in green. This also is a 9-week candle, and it is 7 days until a new candle. This is already a large candle, and trying to long into already established long candles is not that easy, because a lot of times they don't want to go too much higher. They need a new candle, and then on new candles you have to be careful with pullbacks, right? So ideally, these positions should be into the start of candles or good setups. Like, once this small dip down flips green, these are kind of where you want to be trying to get along on it, right? And then you get to move up. Don't get me wrong, the monthly could do something like this, right? Or something like this. We could be creating the red wick. See the wick here? Like, if this pops up and flips green now, this is fantastic, of course. The other thing, and I don't know, if you had just bought down here, okay, well that is putting you in a better position if you just bought here. If you bought up here somewhere, it's more of a dangerous position. But if you just bought down here, it might help you a little bit. It allows you to get out if there's any bounces and stuff. So I just don't know your position properly. I like the fact this is 6 months is green, right? I like this. This looks like, to me, it's eventually going to run. Like, it looks like it's going to do something like this. And I also like the 3-month chart. This 3-month chart is attempting to be strong and hold up after taking liquidity down here and move up. It's looking okay, right? I am just not the biggest fan of this candle, in the fact that we're just about to close a weekly candle, right? This is a bad rejection, so it becomes dangerous. As I mentioned, you have a 15% buffer before your liquidation. There's a possibility to get that bounce up on here before some sort of drop, before the real move. Okay, so that's the way I think it's going to play out personally. Something like that. There's also a chance, right, and that it could get the drop first and then go. Okay, but because of the strength we're seeing today, there might be continuation bounce on a new day, bouncing up here before rolling over, before going higher again. That's the way I think it'll play out.